Hello and welcome to the Trading Academy. So in this particular video, I'll be teaching you how to select the best time frame for your trading. I've been able to make a lot of money from the Forex market just because I know the best time frame suited for my own trading. And that's what I want to teach you in this particular video. I'll teach you how I've been able to select the best time frame, how I got the process that I used to select the best time frame for my trading, and how I've been able to make millions of money trading the Forex market, and how I've been able to teach my students to actually make millions of money in the Forex market too. So if you want to learn that, stay with me for the few minutes that we'll spend in this particular video, and by the end of this video you will definitely know the best time frame suited for your trading and how to make millions of money from the Forex market. There's a lot of money to make in this market, trust me. So if you know the best time frame for yourself, that gives you a whole lot of edge. In fact, 40% of your trading decisions and the outcome of your trades is actually dependent on the time frame through which you actually enter the trade. So if you don't know, if you enter with the wrong time frame, I mean 40% chance, like you've lost 40% of your chance already of winning that trade. So stay true to the end of this video and learn how to get the best time frame for your trading. So that said, let's jump right into the video. So in order to actually explain and teach this video, this particular tutorial, I'll be dividing the factors that you need to consider while choosing the best time frame for your trading into 4. Okay, I'll divide those factors into 4, and these 4 factors would help you determine the best time frame for your trading. Okay, now let's face it, there's actually nothing like the best time frame for trading, because a lot of people making money on the 1 minute time frame, there are people making money on the 5 minutes time frame, there are people making money on the monthly time frame, there are people making money on the 4-hour time frame, there are people making huge money on the 1-hour time frame. So all the time frames can actually make you like really good money. Okay, so when we talk about the best time frame, we actually mean the best time frame for you, because the best time frame for trading is actually the one that is best suited for your trading strategy, the one that is best suited for your trading style, for your lifestyle, for your time, and all of that. Okay, so I'll dividing those factors that you need to consider while choosing the best time frame into 4 factors. Okay, so I would really advise that you stay to the end of this video so that you don't miss out on the loads of value that I'll be giving out in this particular video. Now, some of the things I'll be sharing with you experiences I have over my 6 years of trading practice. Okay, over 6 years I've seen these things happen again and again. I've seen the best of traders come into the market and lose money, and I've also seen the worst of traders come into the Forex market and make like huge money in a very short while. Okay, so it all boils down to what works for you. Okay, so what I'll be guiding you in this video is to help you to find out the best time frame suited for your style of trading. Okay, so that said, let's move right into these 4 factors. Okay, so before we start, I would like you to subscribe to this channel if you're yet to subscribe. So subscribe, like right now to the subscription. Okay, so I trust that you've done that already. So let's just get started. So number one of the first factors you have to consider is the type of trader that you are. Okay, what kind of trader are you? Are you a scalper? Are you a day trader? Are you a swinger? Or are you somewhere in between one of those things? Because of course I believe there are not just 3 types of traders, there are actually like up to 6 of them. In between a scalper and a day trader, there are some guys that are intermediate, and in between the day trader and the swingers, there are guys that are also somewhere in the middle right there. Okay, so you might fall into any of these categories. Now, the major difference between these type of traders are the number of the time they actually get to spend in a particular trade or trying to enter a particular trading position. Okay, so for scalpers, they are much more I call them the impatient guys. Okay, which there's nothing wrong with that, right? But however, they are the guys that just want to go into the market, get like very quick bucks, and be on their way on their way home. Okay, just 5-10 pips, they are done for the day, or maybe at most 20 pips. Most times they are just done for the day. So it's really good. Sometimes I scalp the market when I see like really good opportunities. So now, if you're a scalper, you will definitely need to choose a time frame that is suitable for scalping. you can't be scalping on a 4-hour time frame, for crying out loud. You can't be scalping on a daily time frame. You can't be scalping on a monthly time frame. You definitely need to go to a lower time frame where you can see the prices much more. The prices will be much more volatile for your style of trading. Now, for instance, let's just be more practical with this. Now, this is a 4-hour time frame on Euro GBP. Now, as you can see, the average true range here. Here's my ATR over here. My ATR says that each of these candlestick at the moment over 40 candles is 25 pips. Okay, and for a scalper you're looking at like 10 pips, 15 pips. So let's assume you want to trade off this particular maybe blue candle or red candle. You definitely need to put a stop loss that is at least more than 25 pips, okay, which like destabilizes your whole trading plan and all of that, because as a scalper you're probably looking just for just little pips in the market. 5, 10, 15 pips, you're off. Okay, so you definitely need to scale down to a lower time frame like the 15 minutes or the 5 minutes time frame that would actually give you less. As you can see, the ATR here, ATR, if you don't know what an ATR is, ATR simply means like the average range of bars of candle over a period of time. So mine is ATR, my period is 14. I use the 14 period ATR. Okay, so as you can see, the average length of bars of over 14 candles for here is 8 pips, which makes it like really good. Okay, now maybe I will do a video on just how to use the ATR, maybe a more detailed video, but however, this is a video on time frames. Okay, so let's not get over ourselves, right? So you probably need to just go down to a lower time frame that allows your style of trading. Okay, so you can move to a 15 minutes time frame. That would be really good time frame for you, or 5 minutes. That would be like really good time frame for you if you are a scalper. Okay, you can't be scalping on a 4-hour daily time frame. Even a 1-hour time frame, it's not really very advisable for scalping. Okay, so that's the first thing to actually consider. What style of trading do you use to trade the market? Okay, so for instance, if you're a swinger, you're actually looking for like let's say 50, 60, 100 pips. You're looking to catch like really long swing. As you can see, these swings are not really, of course you can swing on a lower time frame, but however, swinging makes more sense when you're swinging on a higher time frame. Okay, so let's do 4 hours. So as you can see, from here, let's measure this swing from here over to here. As you can see, this swing over here is 82 pips, which is like really nice. Okay, this whole swing here is about 85 pips, approximately 85 pips over 20 bars. Okay, so as you can see, that swing is 85, which is really okay for swinging. Okay, because you're looking to stay in the market for a very longer time. Okay, so it's clearer to see like opportunity to swing real good on a higher time frame like the 4-hour, the daily time frame, or probably the 1-hour time frame. So that's the first thing to actually consider. What style of trading are you using in the forex market? Okay, that's one. Now the second thing to actually consider is, what are you looking for? Now I tell people this, and I teach this in our forex bootcamp, the classes and the online courses. I teach this over and over again. Never enter a trade based on what you're seeing on one single time frame. It's really not wise to actually just make all your trading decisions or you're on just one time frame. Let's assume you're on a 4-hour time frame. You're looking at the highs and lows of the 4-hour time frame. You're not considering that what's happening on the daily time frame or what is happening on the 1-hour time frame or 15-minute time frame. It's totally not wise. Now there are a combination of time frames that we actually use at the forex bootcamp and all our classes in the academy. Yeah, there's a combination of time frames that we actually use, which I will not be going into here. Is actually exclusive. The combination and how we find entries on each of the individual time frames is actually exclusive to the forex bootcamp course students. So you might want to get the course if you're interested to get our own combination and learn how we trade at the forex bootcamp and the Trade With Academy, right? So, but however, do never make a decision just based on what you're seeing on just one single time frame. Okay, so I'll just give you an idea what our time frame looks like and what we use each time frame for. Now, first thing you have to use you're actually looking for on a particular time frame. There are 3 things you might be looking for based on the time frame that you want to use. Number 1 is bias. we use a particular time frame to determine the bias of the market, like what we are predisposed to do. Are we looking to sell? Are we looking to buy? We use a particular time frame for that, usually a higher time frame for that. Determine the bias. Okay, what's like the overall trend of the market? Where's the market actually going to, and what are we looking to do going forward, going further down, like on a lower time frame? Now, the second time frame we use is for confirmation. Now, is this second time frame, is it confirming what we're seeing on the higher time frame? Okay, what we're seeing on, let's say we're using the monthly time frame, and we're now on a daily time frame. Like, what are we looking for on a daily time frame? What we're looking on a daily time frame is confirmation. Is the daily time frame confirming that what the monthly time frame is saying is actually true? Now we now scale down to another time frame where we now do enter the trade. We don't enter the trade on the confirmation time frame. Okay, never enter a trade on the confirmation time frame. Find entries on a lower time frame. It helps you to get like really good entries, better places to put your stop loss and your take profit. So know that. Okay, so those are two things to consider in terms of the time frame and what you're looking out for. So the best time frame for you, it's dependent on what you're looking for on that particular time frame. So if you're a scalper, you probably might not want to be looking for a bias on a monthly time frame or a daily time frame or something like that. So that's just an overview of how it works. So if you want more detail about that, probably you would love to join the academy and be a part of our classes to learn all of that. Okay, so number 3 thing you definitely need to consider is, where are you hoping to put your stop loss? Where's your stop loss? Now, for instance, let's go again. Let's say we're we're on a daily time frame, for instance, and for instance, we're on a daily time frame and we're looking to, let's say, go long. Let me put a replay on this. Okay, let's assume we are hoping to go short. Looking to go short on this. Okay, we are hoping to put our stop loss somewhere here and our take profits, let's say, somewhere here. Okay, this is a typical 1:1, right? Now, for instance, you can see the stop loss here is 166 pips. Now, what you need to consider is 166 pips. How is it compatible with your trading capital? If you put a 166 stop loss on your trading account, how is it going to make you to lose like 20% of your capital if you actually make a loss, or are you going to lose, let's say, maybe 2 or 3%? Okay, so where to put your stop loss is something to consider when choosing the best time frame for your trading. Okay, now let's assume you want to take a trade just like this one. Let's actually see whether this actually played out. As you can see, if we enter this trade, it would have been okay. It's still ongoing, currently unprofitable. However, that's not what we're here for. So let me put this off. Okay, so let's go down to the 15 minutes time frame. Now let's do another replay. Let's place somewhere here. So let's assume in this particular trade you want to go long on this particular trade, and you want to do a typical 1:2, 1:1.5, or 1:1.5. okay, so you want to go long on this particular trade, and when you consider the stop loss here, is 22 pips, which is fair enough for somebody who is wants to do day trading. Okay, which is like really fair. Okay, really fair. So how what you need to consider is this time frame that you're going to be entering this trade. Remember, like I said, we use different time frames for different things. So this is like, I'm considering based on the way we trade at the Trade Academy. If this is our entry time frame and this is what the stop loss look like, is it compatible? Is it compatible with our trading style? Is it compatible with if I'm a day trader, is it compatible? If I'm a swinger, is it compatible? If I'm a scalper, is it compatible with my style of trading? You get it. So if, for instance, this trade actually hits stop loss, okay, if this trade actually hits stop loss, how much percentage of my capital is it going to wipe for my trade, depending on the stop loss, on the lot size, that I'm going to use, like how much of my account is it going to wipe off? Okay, so these are things to actually consider when choosing the best time frame for you. Okay, now the final thing you need to consider, of course, it's something it's actually encapsulated in this particular third one, is your type of trader and your capital for trading. Okay, if you have a smaller capital, let's say you're trading a $200 account, you would definitely just need to avoid higher time frames. Okay, like the daily time frame. You might even want to avoid the 4-hour time frame. Okay, unless the signal you're seeing is maybe just enough to give you a stop loss of let's say maximum 40 pips. Because if you're using a $200 account and even if you're risking a 0.01 and it's a 50 pip stop loss, and you hit you lose $5 out of $200, you've probably lost almost that's like 2% of your account size, which is, well, it's fair enough anyway. It's fair enough. But however, we usually advise in Trading Academy, never trade anything less more than 2-3% of your account. So actually losing $5 on $200 account is still fair enough, actually really fair. Okay, well, however, if you're using a $100 account and you lose $5, you've lost 5% of your account, and your trading psychology is under threat. Okay, your trading psychology, your emotions will be under threat. You will be under pressure to recover your 5%. Okay, because I like approaching account sizes as a percentage. I calculate my losses, my wins as percentages. Okay, so if you can do it, whatever you can do on a $100 account, you probably can do the same on a $1 million account. Okay, so those are the 4 things to actually consider. So here's a quick recap. Number 1, you have to consider the type of trader that you are. What style of trading are you using to trade the market, or are you hoping to use to trade the market? Choose a time frame that both the length of candles, the bars, and all of that, the support and resistance levels, support your style of trading. Number 2 is know what you're looking for on each time frame. Are you looking for a bias on the 4-hour time frame? Are you looking for a confirmation on the daily time frame? Are you looking for an entry on the monthly time frame, or whatever time frame you want to use to enter or execute your trade? So all the time frames are not saying the same thing. Okay, so you need to combine all the some time frame, not all. If you combine all the time frame, you go crazy, man. But you need to combine maybe 1, 2, 3 time frames together to actually make a trading decision. Your trading decisions are much more precise when you combine time frames. Okay, number 2 is where you want to put your stop loss. Where do you want to put your stop loss? Do you want an average of 50 pips stop loss for every trade you're entering, or do you want an average 100 pips or 200 pips of stop loss when you're trading? Okay, that's another thing. Now the last thing to consider, like I already explained, is your capital. Is your capital permitting the kind of trades you want to take? Is it big enough? What's the percentage you're going to be risking on the average when you are trading on that particular time frame? So those are the 4 things to actually consider when choosing the best time frame suitable for you. So I'm hopeful that I've been able to make a lot of sense to you in this particular tutorial. So if I did make any form of sense to you, go ahead, subscribe if you haven't subscribed to this particular channel, and talk to you some other time. Cheers to your trading. I do hope that you make really good profits on your trading accounts. Okay, so cheers, have a wonderful day ahead. Bye.